Alright, what is up, guys? Welcome back. I'm going to go ahead and explain to you guys how I trade, and this is gonna be a more in-depth video of how I figure out what trade I should take. Um, you can see on my screen I have Tesla. I'm using Fidelity Active Trader Pro, and just to get straight into it, I'm gonna go ahead and just explain what's on my screen. I have the strike price of Tesla, and I have the XPX and NDX markets on my screen. I also have Tesla's stock. It's self-explanatory. You have symbol, last bid, ask. And for premium trading, what I do is I write down whatever the stock is at before a market open, and whatever price it's priced at on that day at that time. I go ahead and the following week I go ahead and do the same thing, and if I find a mismatch in price, I go ahead and jot that down, and that'd be my indicator on if I should take a trade or not. So I'm gonna go ahead and explain how I exactly pinpoint figure out which trade. So if you look, I have Tesla at 350 on a Monday. 20 points out is 370. So if I look at Tesla's 350, Tesla, I already jotted it down, but for future reference, if you guys are trying to keep track of where a stock is at, just go ahead and write it down, and or just take a picture on your phone and just put that on the list, and it should be way easier. You can go ahead and figure out the price if you didn't take a screenshot, or if you didn't jot it down, but I find it very useful that you take a picture. But Tesla closed at 350 on a Monday, and 20 points out would be 370. So 370 was at 13.60. That is 1 week out. I'm always using a week out for my direction. Same with Tuesday. Tesla closed at 228. Give or take 20 points out is almost at 350 ish, so 9.95. This is all on the ask of premium. 1 week out, of course, I just jot down the day and expiration. Same with Wednesday, 20 points out, 50, 350. Premium price for that contract is 825. Realistically, if it's not at that strike price, the premium will go down unless it passes, then the premium is raised. But for this instance, you can look at Thursday and Friday, which is perfect. So at 310, 30 points out is 330. 5.20 is the $500.20 is the cost. But if you look at Friday, the stock actually moved up 10 points. So 320 closed at 320, and 340 is 20 points out. So it actually moved up, but you can see that the premium is lower, 470 on that Friday. So again, you're not at that strike price yet, but if the stock moved up 10 points, and realistically this should have been a little bit more, or around 520. 20 points out is 20 points out. Okay, now come that Thursday and Friday, I'm gonna go ahead and see if the stock is back at 310, and see where that price is. So let's say the stock is at 310 and 20 points out. It closed at 310 and it's 20 points out. Just as this is a possibility that if it does, that if it's let's say it's the same, it closes at the same price, and you look at 20 points out, and it's for some reason not 520, then it's $8. Or if it's $3, then you could tell if it's overpriced or oversold. So or underpriced, I should say, my bad. And so that could be your point of direction where you should go, whether it's up and down, whether the premium is being added to the calls or to the put side. And it doesn't have to be at the 310. It could be 20 points out is 20 points out. It could be Thursday before market opens. That's even better. But let's say if it's at the same price that it closed at 310, then that could be a bigger sign to show me that which way it's going. Like I said, it doesn't have to be at 310. 20 points out is still 20 points out. on a Thursday before market open. Now, let's say 20 points out is at 350, and we're going to the 370s. That brings us to Monday-ish price action. Then that means that you know if it's not 1360 and it's like 15, then that gives me an indicator too. But let's say it happened on a Thursday, then that's giving me a signal that, okay, well, I know that Monday the 370s were at 1316. Now on a Thursday, same price, same contract target, and it's at $16. So you're almost at 240. So your premium was added, if you guys can see where everything is lined up at. So premium was added, and that gives you a clue on where to go or what might happen, whether it's news, whether it's the Fed speaking, whether it's some type of whatever that can move the market in a certain way, up or down. That's what you're looking at. Same thing with Monday, Tuesday, Wednesday, Thursday. 20 points out is 20 points out. I look at it like this. So you go into you go to this corner store and you buy a candy bar, every now and then, right? Let's say you buy a candy bar for 2 months, and usually it's $1.50. Well, out of nowhere, the price was bumped up to the $2. Okay, 50 cents. You're not thinking none of it. Price is bumped up a week later to $2.25. No, I apologize. Let's say it's at $1, and it's bumped up to $1.50. All right, you don't notice it. It's only 50 cents. And the next thing you know, then the week following, it's at $2. Now you're like thinking, hey, in a week it moved up 50 cents. That's weird. They're raising the price, and you notice that. So let's say the next week they raise it up by 50 cents, $2.50. Now this is premium being added. Mind you, this is a simple way of thinking of it. Then you're like, okay, well, they just added $1 premium in the last, week and a half. Let me buy 5 of them because they might move 50 more cents, and I can probably sell it for a small profit. Next thing you know, the candy bar is at $3. Now you're like, okay, well, I can sell them at $2.50 because I bought them at $2. Now, whatever you sell them at 50 cents per, that is your profit. That is the simplest way of looking at premiums, and I find it very helpful that instead of using charts and indicator and technical analysis, that finding the deviation of what is being priced at. Like you say, a lot of people say that price action is king, where price action is very, very useful, but the way how you use it and premium is a different ball game. It's just like you're not waiting for candlesticks to show you how where a stock can go. You're not waiting on an indicator to tell you if it's overbought, oversold, or when to buy in or when to sell. You're just looking at which direction it can go, because whoever's pricing these contracts at a certain price is obviously paving the way. So yeah, that's pretty much it, guys. Let me know if you want any other videos on explaining premium, and go ahead and show you live content of how it actually trade.